Corpsumer. Trying to get this business right for some years, but who really cares? Incorporated my company with 100 million shares, but who really cares? I taught myself to wholesale real estate in about a year, but who really cares? My trust revocable for the benefit of a chosen few, but who really there? Who really there? You? Welcome back, YouTube. Thank y'all for tuning in. It's your man Wilk, Corpsumer Inc., Real Estate and Lifestyles channel. Today's video is going to be about Warren Buffett's secret sauce for investing success. He says, be business pickers and not stock pickers. So let's get right into it. Berkshire Hathaway founder Warren Buffett, one of the most successful investors in the world, says he and Vice Chairman Charlie Munger are not stock pickers, we are business pickers. In the company's annual shareholder letter published a few months ago, Buffett explained that the secret sauce of their investing success is to make investments in businesses with both long-lasting, favorable economic characteristics and trustworthy managers. This approach is known as value investing, where the goal is to hang on to a top-performing stock rather than trade stocks based on short-term price fluctuations, otherwise known as active investing. Of course, picking winners isn't easy, but Munger has previously outlined 4 rules that the 2 Berkshire Hathaway executives follow when choosing whether to invest in a business. Aside from Buffett's #1 rule, don't lose money, here are 4 questions that Munger and Buffett ask when deciding whether or not to invest in a business. Check it out. Question number 1. Do you understand the business? Aside from knowing how a business operates and what it offers to consumers, you also want an idea of where a company is going to be in 10 years, if not for decades, says Buffett. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes, he wrote in a 1996 letter to shareholders. Berkshire Hathaway famously missed out on tech companies Google and Amazon in the early 2000s because Buffett wasn't sure he understood the businesses in terms of their long-term profitability. This made it harder to determine the value of their stocks. While Berkshire may have passed on Google and Amazon, other investments in blue-chip companies like American Express and Coca-Cola have paid off over time. This cautious approach might mean missing out on more speculative opportunities, but Buffett has said that he and Munger miss out on a lot of things and will keep doing it. So that's very interesting that he says that. It seems like they're very dedicated to their business model, and I think they don't really get spooked too easily. If it doesn't fit their model, it seems like they won't hesitate to pass up on the business. So all you guys that's looking to prepare your business for purchase or prepare your business to be sold or to be invested in, definitely take heed to some of this information because it definitely could work out for you in the future. I know I'm taking notes, so definitely I look forward to this, So let's get into it. Number 2, does the business have a durable competitive advantage? Buffett has said that the most important factor in picking a successful business investment is the company's competitive advantage, which he likens to a moat surrounding an economic castle. That's an interesting picture he just made me draw in my head. The more secure the competitive advantage, the more likely the company will prosper over decades. A competitive advantage could be a powerful brand that people are always willing to pay for, like Coca-Cola, or it could be a unique business model like selling insurance directly to the consumer rather than through insurance brokerages, as is with the case with Geico. So that's interesting as well. So not only is he giving this information, out freely, but he's also like walking this information. He's like living this information. So if you pay attention to a lot of his businesses, you can see where his competitive advantages are compared to his competitors. So yeah, let's get into it. Number three. Um, let's see here. Number three. Does the business's management have integrity and talent? Does your business have? Does your business management have integrity and talent? Hey, well, we don't know. Buffett has said that he looks for three things in a manager or leader. He looks for intelligence, initiative, and integrity. But integrity matters most of all, because if you're going to get someone without integrity, you want them lazy and dumb, he said in a 1998 speech. So this is information that, he's kept in his pocket for over 25 plus years. This guy is a genius when it comes down to you know um, integrity and business models and sticking to the plan. It seems like just following through is very important. Um, we do not wish to join with managers who lack admirable qualities, no matter how attractive the prospects of their businesses, Buffett wrote in a 1989 shareholder letter. We've never succeeded in making a good deal with a bad person. Interesting. That's deep. That's deep. So he also says with integrity comes trust. That means Buffett and Munger don't have to spend much time micromanaging every decision a leader makes. So again, you guys might work for a company that has all the opposites of what these guys are naming, but things could change. So, if you consider yourself to be a person who has admirable qualities, then definitely you'll probably be in front of the line versus a person who doesn't when it comes down to what Buffett and Munger would look for, or a company that they might choose to invest in. So, again, keep good quality business practices, and just continue to learn and continue to stick to the plan, and do things fairly and do things according to the rules. It seems like Buffett and Munger will be your best friends for sure. Let's get into number four. Lastly, number four, does the price make sense? Interesting. As a passive investor, Buffett and Munger seek out companies that seem to be trading for less than their value. While there's no universal measure of value, companies with long lasting earning potential tend to have consistent earnings, good cash flow, and a low amount of debt. When a stock price seems low compared to the company's value, that's an opportunity to buy. But that doesn't mean that Buffett and Munger seek out the best bargains on the stock price alone. Simply getting a fair price on a stock price, um, on a company's stock, sorry about that, can be an effective strategy too. And again, that's simply getting a fair price on a company's stock can be an effective strategy too. You're investing in the business's long term, not just the stock price at the time of purchase. So you might want to remember that, if you're looking to invest in companies' common stock, you might want to keep in mind that you're investing in this business long term, not just for now. So things can be looking good, but they can be trending downward, and you might want to keep that in mind, or at least have some indication of what the trends are, according to what these guys are talking about. I'm no expert. Um, uh, and Buffett says that it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Interesting. And Buffett wrote this in 1989 at an annual shareholder meeting. So in one of his letters as well. So he says, when buying companies or common stocks, We look for first-class businesses accompanied by first-class management. Definitely something that I would agree with. Definitely something that I aim for as a business owner. Definitely something that I'm going to keep in mind continually with the goal to be able to ring that bell one day, on the stage with a lot of other shareholders. Yeah, I definitely have my own goals when it comes down to stocks and things like that. So just to put this information out there, I think it might can be some motivation to others who may want to look into how to incorporate a company to actually, hold shares, so that way people can invest in your company and you could actually get a stock price or a valuation on your company. But again, I'm no expert here. This is just the information that I'm coming across along my journey as well. So feel free to put anything in the comments that you may seem to be helpful. Um, so yeah, what do you guys think about this information? What do you guys think about the four questions or the four things that Munger and Warren Buffett look for when they're looking to invest in a company? Do you think that it's fair? Do you think that it's too long of a list? Do you think that it's obtainable for businesses to kind of meet the qualifications or to meet the expectations of what Munger and Buffett are looking for? Definitely leave some comments. Feel free to let me know how you felt about this video. Again, it's your man Wilk, Corpsumer Inc. I want to thank you for tuning in. Like, comment, subscribe, and I'll see y'all later, man. Peace. Corpsumer. I'm trying to get this business right for some years, but who really cares? Incorporated my company with 100 million shares, but who really cares? I taught myself to wholesale real estate in about a year, but who really cares? My trust revocable for the benefit of a chosen few, but who really there? Who really there? You?